All right, so business loans, they can certainly be a very, very powerful tool to help you guys grow your businesses. However, it is important to recognize that acquiring a small business loan can be a lengthy and arduous process. So familiarizing yourself with the typical business loan requirements of lenders beforehand can actually help you avoid unnecessary frustration and really streamline the application process. Now, to determine your eligibility for a loan, lenders are going to typically consider several factors. In today's video, I want to cover 7 key elements that lenders are typically going to be reviewing to assess your qualification for a loan. Let's go ahead and jump right in. Number 1, credit scores. In order to qualify for a government-backed SBA loan or traditional bank small business loan, a great personal credit score or excellent business credit score is going to typically be required. Now, online lenders may place more emphasis on your business's cash flow and business's track record, and it might be more lenient with credit scores. Personal credit scores reflect your ability to repay personal debts like credit cards, auto loans, mortgages, student loans, etc. Lenders consider personal credit scores because they prove you have debt management skills, let's say that. For established companies, business credit scores are available through credit bureaus like Experian, Equifax, Dun & Bradstreet, and so on. And these scores typically range from 0 to 100. Building business credit involves establishing trade lines, maintaining clean public records. We actually dove into a business credit video recently in a previous video, so be sure to check that out. I'm going to put that in the description for you, or you can click the link at the top of the screen here. Now, the second key element that lenders review in order to assess your worthiness for a loan is how long your business has been around. In order to be eligible for a bank loan, a business is generally going to be required to have an operating history of a minimum of 2 years. Online business loans may have more relaxed requirements when it comes to that, but typically still are going to require at least 6 months of business operations. The third key element that lenders are typically reviewing in order to assess your qualification for a loan is your annual revenue. Several lenders have a requirement for businesses to generate a minimum monthly or annual revenue in order to qualify for their loans. The amount of revenue required will vary between lenders, of course. For instance, OnDeck, which is an online lender, they require a minimum annual revenue of $100,000 for its line of credit, whereas Bank of America has a minimum of $250,000. Keep in mind, if your business still has low revenues right now and it fails to meet the minimum requirement for traditional loans, you might need to consider alternative financing options like invoice factoring. Now, the fourth thing that banks are going to consider is the industry that your business is in. Specific industry requirements apply to government-backed loans that are offered by the U.S. Small Business Administration. To start, your business will need to meet the SBA's definition of a small business, which varies by industry. You're also required to be a for-profit company, and you cannot operate in an ineligible industry like gambling, real estate investing, or religious activities. That is not what these loans are for. Lenders outside of the SBA may actually refuse to lend your business based on factors such as the industry in which you operate. So it is important to lead with that information when inquiring about a business loan. It can save you a lot of time in the research stage. The fifth key element that lenders typically review to assess your qualification for a loan is a big one here, folks, and that is your business plan and loan proposal. When considering a loan application, lenders typically evaluate the borrower's proposed use of the funds and also the capacity to repay the loan. It's all about the likelihood of default here, folks. A lender may require that a business plan outlining the company's objectives and strategies for achieving the plan is available. Additionally, some lenders actually might request a business loan proposal that specifies the loan's purpose and then the plan to repay it. So make sure you're thinking about creating these documents. They really need to be clear and present a depiction of the company's ability to maintain ongoing operations and then meet the loan's repayment terms. By providing lenders with this information, they're then able to gain greater confidence in the borrower's ability to manage the loan successfully, and then that increases the likelihood of loan approval. All right, so the sixth thing on my list today that banks are going to be considering is collateral or a personal guarantee. In order to qualify for a small business loan, collateral might be required to secure the loan. Obviously, collateral refers to an asset like equipment or real estate or inventory that can be seized and sold by the lender if the borrower defaults on the loan. This serves as a means for the lender to recover their money in the event of a business failure. For example, collateral is required for the SBA 7 loans above $25,000, and a personal guarantee is required from every owner who have at least 20% or greater stake in the business. A business loan personal guarantee mandates that you, as the borrower, are going to be personally responsible for repaying the loan amount with your own assets if the business defaults. Now, I don't really personally see any major challenges with this. I've personally sent in guarantees on a regular basis through the different times that we have applied for and obtained business lending. Even as recently as last fall, we actually found a $300,000 business loan through a private venture capitalist, a private investor who was comfortable offering that loan with almost no financials because of both personal guarantee and security interest in some of my real estate. So they're completely protected. In the event that the business were to fail, I obviously would be on the hook for that $300,000 through equity in my various properties. So this is something I'm absolutely willing to stand behind as an owner of other companies when we're looking for funding, if I at least feel confident, of course, in the business that I'm attempting to grow. And every business that I've built, that has certainly been the case. Now, some lenders will offer unsecured business loans that do not require any collateral, but they might still require a personal guarantee. In addition, lenders may take a blanket lien on a business's assets, effectively serving as another form of collateral in a sense. And that grants the lender the right to seize business assets like real estate or inventory or equipment to recoup an unpaid loan. It's important to note that each lender is going to have their own specific requirements, and borrowers should inquire about any uncertainties to ensure that they meet the necessary criteria. And I always recommend doing this before you authorize them to pull your credit to avoid the inquiry if there's a deal breaker. Now, the final thing that banks are going to consider here, if you want a business loan, is your business and financial documentation. These financial and legal documents might include personal and business income tax returns, might include balance sheets and income statements, personal and business bank statements, maybe a driver's license photo, commercial leases. I've seen business licenses required. Articles of incorporation are almost always looked at. And a resume that details relevant management or business experience can sometimes help too. Any compensating factor might apply. Now, additionally, if your business has a limited operating history, financial projections may also be required. So it's important to ask the bank to be very detailed and complete in all the things that they're going to require from you in order to offer the loan that you're seeking. Some online lenders may appear to have far fewer requirements than traditional banks, but you'd really be surprised at how often they'll ask for more things as the process continues. So it is best to try to have all of your ducks in a row before you begin the application process. And that's why we've produced the Debt Weapon Cheat Sheet. That is a free gift. We have used it to offer our coaching members and only used to give it to them, but we're now offering it to all of our YouTube audience here and now for free. You can download your free copy simply by visiting the link in the description below. It's a tool that I use every time I go after a new debt weapon, no matter how good I am at getting these. I sometimes forget questions. So this is a great checklist, whether you're applying for a HELOC, a BLOC, business loans, mortgages, even credit cards. Use the Debt Weapon Cheat Sheet to make sure that you have all of the information before giving permission to pull your personal credit. I hope this video has helped you guys out. Make sure you check out all of our videos here on the channel in order to go further, faster financially. Don't forget to like and subscribe. It helps us out tremendously. And drop some comments below. What's been required of you when you applied for business loans? Is there anything that we missed here on this list? Have you seen anything unusual? Certainly curious to see how your experiences have gone. Business loans have literally been what have given me the ability to grow every business I have. And I believe very strongly in leveraging those the right way, the safe way. For a short period of time, we use the money, we pay it back very quickly after we get the results that we're expecting. So with that being said, look forward to seeing you on the next video. Until then, make it a great day today. And most importantly, just keep on cash flowing, my friend. See you soon. Bye-bye.